Final trade time, Tim.
I talked about Rio Tinto valuation call, div call, Rio.
Courtney.
Also in copper, FCX, I think it's worth taking a look. It's down about 10% over the last 6 months, even though copper prices are up.
Coppery tonight.
Nice.
Steve.
Another metal for you, steel. Letter X, I think it has a little more gas in the tank to go higher.
We got Georgetown University. Make noise so the people know you're here.
Wow, they are here.
Crystal Myers, that'll get you done.
All right. Thanks for watching Fasty. Back here tomorrow at 5 for more Fast Money. Mad Money with Jim Cramer starts right now. Wave, Georgetown.
I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll do my friends. Hey, man, I'm just trying to make a little money here. My job is not just to entertain, but to explain, to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You can be cynical and corrosive, or you can be critical and constructive. In real life, I know many smart people who choose the former, including even when it comes to stocks. My view, you can be as cynical and corrosive as you want about the vast majority of things in the world, in life. But if you're trying to make big money in the stock market, you're actually better off being critical and constructive. Reflexive negativity is not a smart strategy, and you will most likely trade yourself into oblivion with very little to show for it. Now, if you don't adopt that more constructive approach, then on days like today, Dow gained 272 points, S&P advanced 0.41%, NASDAQ declined 0.18%. You're going to miss some terrific opportunities, the ones that abound daily around here in the greatest market in the world. Let me give you a few very obvious and gettable examples for you of stocks that have soared in the last week, stocks that were previously written off, and many of them were left for dead. The cynics missed all of these moves. The optimists, with the exception of one, you could have caught all of them. I want to start with today's trading. This morning, Walmart, largest retailer in the world, reported, and the stock initially rallied on the strength of their results. That was about 7:15 in the morning. But then management was cautionary about tariffs, don't blame them, and the need to raise prices on the conference call, don't blame them, and the stock very quickly reversed and dropped 6 points from its peak before the market opened. Now, I have to tell you that reaction staggered me. I was on television, and I pointed out that Walmart's kind of like the Philadelphia Eagles. The Birds won the Super Bowl because of their dominance in what we call the trenches. I'm positive that Walmart, too, will be a winner because of its dominance in the trenches, its expertise, its sourcing, its inventory management. Those are second to none. I mentioned that their balance sheet gives them a level of flexibility that the other retailers most certainly don't have, with the exception of Costco. Walmart can be tough with suppliers because they've got more bargaining power than any other store on earth because they've got that scale. And let's not forget that a quarter of their profits come from advertising, amazing gross margins there, and membership income. That's an unassailable set of qualities equaled only by Cramer Fave Costco. These advantages aren't going away because of the tariffs. If anything, I think they're going to be accentuated. Tariffs are a problem for the entire industry, but Walmart's one of the rare companies that can cope. Sure enough, the stock rallied from down 3 and change and almost back to even. And I think the cynics who don't believe that Walmart can handle this moment, they are destined to be losers. Now let's talk CoreWeave, the one that was probably the hardest to get. It's a company that runs data centers that are geared toward artificial intelligence. This company came public at the end of March at $40. It was almost like a forced IPO. They had to get it done. Before the IPO, everyone thought this was a red-hot story. But then Wall Street gave up on the entire AI edifice, and people lost interest in this deal. It had to be downsized. And by the way, it also come at a much lower price because people were so skeptical of its business model. CoreWeave's the classic example of what I'm talking about. We took a hard look at it right here, met with the principals, even visited one of their data centers when we were out in Las Vegas. And we were convinced that these guys are real pros, the real deal, so to speak, and that the business really is en fuego. I knew people would be nervous about this one because as a young, incredibly leveraged company, it could stay unprofitable for some time. But as people got more comfortable with it, they realized that CoreWeave was actually doing incredibly well, something that the people at Nvidia confirmed. Nvidia is a big investor in CoreWeave, and it seems like the relationship was very strong. Sure enough, this stock got crushed, dropping from $40 where it came, the price of where it came public, but that's where they priced the deal, to $33 in 3 weeks. But you know what? We kept pounding the table, knowing the CoreWeave's business was doing great the whole time. A few weeks ago, the stock bottomed, and by last night, it had roared to $67. When the company reported last night, everything I said would happen happened. And the stock initially rallied hard in after-hours trading, although eventually it pulled back because management plans to invest heavily to meet sky-high levels of demand, and people are freaked out by that. Still, the stock's basically doubled since late April when I told you had to buy it. People were just too cynical and uninformed about the prowess of the scrappy company, and it gave the constructive and optimistic among us a much better opportunity to buy than anyone thought possible as recently as a month before the IPO. More on CoreWeave later in the show because it's such an important situation. Next, okay, let's go back to the obvious. Boeing. See, for the longest time, Boeing stock was a pariah because it seemed like they'd forgotten how to make airplanes. Now, we know a couple of things about Boeing. First, it's one of the only two major aircraft manufacturers in the whole world, the other being Airbus. Second, it had a hideous balance sheet. I mean, just awful. I mean, just
the house of pain.
Thanks to all the accidents in recent years. As long as it was hobbled by a bad balance sheet, the stock was too dangerous to own, and you were right to be critical. But in October of last year, Boeing used the capital markets as they are intended, tapping investors for $24.3 billion in stock and bonds. They sold 112.5 million shares at $143. That was enough to put the balance sheet, let's say, on even keel, so that the company could start playing offense. Now, Boeing just won the biggest order, 150 jets it's had. It's a deal that the president helped broker when he was in the Gulf. Every country we trade with wants to extend an olive branch to the White House, and the easiest way to do that is by placing gigantic orders with Boeing. Now the stock's at 206. The stock rallied more than $60 from its lows last fall.
House of pleasure.
You just needed to be sure the balance sheet was fixed, and suddenly the loser became a winner, much to the cynics' dismay. Look, these things occur every day around here. Think about what happened to the stock of Disney in the last few months. A week ago, the stock was at $82. A month ago it was at $82. 1 month. People were buzzing about how the theme parks are too expensive, the sports entertainment's too expensive, the movies are either too woke or not woke enough, depending on who you ask. You never heard anyone say it got the right amount. Now, 1 month later, Disney's at $112, pretty much in a straight line. The company reported a terrific quarter. Turns out people are willing to pay top dollar for the theme parks. The sport deals are making plenty of money, and I guess the movies, well, let's say they hit the Goldilocks level. Not too much, not too little. Same company. Just written off by the pessimists, the ones who gave up on all of that excellent expertise and intellectual property. Think of the money that they didn't make. Or let's not forget the best of them all, which is Nvidia. Not long ago, people decided that despite ample evidence to the contrary, the big AI data center thesis was just over, kaput. The Chinese have supposedly come up with a better mousetrap. Remember that DeepSeek issue? The Biden administration put up barriers that prevented Nvidia from selling its chips to most countries. Unbelievable. Adding insult to injury, the Trump administration put through rules that caused Nvidia to take a $5.5 billion charge for chips it could no longer sell to China. At that moment, it was easy to believe that Nvidia's Cinderella run was just a fairy tale. But this story was always reality. Not only did the demand never go away, but now the president's helping these guys land huge orders from the Gulf monarchies. That's how a stock runs from 94 to 134 and change in 5 weeks. And I think it could go even higher now that Jensen Huang, the CEO, is about to go to Taiwan to spread the GPU gospel next week. I'm expecting some big orders over there. Look, the market's full of stories that sound too good to be true, but they are true. The terrific run in ATT that you've called me about. The amazing comeback of First Solar that so many people are interested in. The resurgence of a strong ad tier in Netflix. But they're the real deal. So here's the bottom line. If you examine these same opportunities with a jaundiced eye, too critical, too negative, I know what would have happened. You would have passed on all of them. But if you're open-minded, if you were constructive, any one of these could easily have made you a boatload of money. I want to go to Ryan in Ohio. Ryan.
Hey, Jim, how are you?
I am good, Ryan. How about you?
Good, thanks. Last time I called, I inquired about a new book by you, and you couldn't comment, so I'm glad to say that I finally have an answer to that.
Well, it's coming. It's coming. I don't like to promote things before you can get them. I mean, this is actually something they gave me to promote, but in reality, it's something of no interest to me inside it. But Because it's not my book. You see, because it's not finished yet. But thank you very much. How can I help?
So the reason why I'm calling, I'm inquiring about a stock that currently has a PE of 59, and looking at the daily chart, it looks like it wants to form a massive head and shoulders pattern, and recently it partnered with a firm, which may give some insight into the state of the consumer. So my question is, more so in the short term, what do you think of the stock, not the company, of Costco?
Of Costco? Costco's fabulous. I mean, I think Costco may be, just I saw that Affirm deal. I was surprised. Costco's so good that the stock went up $18 on Walmart's problems. Now, that is wrong. First, Walmart doesn't have any problems. But second, Costco has a better business model because they get all their money from the card. But when I saw that, I said, wow, people are finally starting to get rewarded. They get why I think Costco is so fantastic. Let's go to Nick in Florida, please. Nick.
Hi, Jim. Booyah.
Booyah.
How are you today?
Today was a weird day. I was hungry all day. Kept sending people out to get stuff to eat. I don't know why. I can't even tell you why, but it was a great day because, boy, they brought back great stuff. How can I help you?
Awesome. So DraftKings lowered their full-year revenue for 2025 due to favorable sports outcomes in the first quarter.
Right.
While still projecting year-to-year growth around 32%, DraftKings CEO noted a slight slowdown in April and attributed to sports seasonality.
I know.
Do you still
Nick.
think DraftKings is good, or
Nick? I've got to tell you, you could say I've been too bullish on it. I just really believe that we're still too far away from football season, but I do genuinely believe that what has to happen is some of these states that don't have gambling have to get gambling, and that's what I think it's really about. I thought it was about the handle. I thought it was about the hold. I'm beginning to think it's about these states that don't allow gambling yet that have to. Right, now listen to me. Any of the stocks I just mentioned could have made you a boatload of money, but you had to be open-minded and you had to be less corrosive and more constructive. Remember that word, constructive. Oh, man, money tonight. Could there be a new fuel ahead for natural gas? I don't know. I'm going to dig into the state of oil and gas company with the CEO of a club named Qatar Energy. Then CoreWeave, I just mentioned they reported their first quarter. I got to give you really a bigger deep dive because it's so important right now for the stock market. And later, I'm checking in with a standout stock during Mad Money's tenure that I used to own as a hedge fund manager called UFP Technologies. Don't miss my conversation with the CEO and stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.